when you see the People's Bank of China buying gold. They're not buying gold, they're selling dollars. That's the way to look at it. And it's not just them, it's the whole of Asia doing exactly the same. And the word is out throughout Asia. The dollar is in.
You're watching Silver News Daily. Subscribe for more.
Did you know that a single investment could send silver prices into an absolute frenzy, reaching new heights? Imagine if just one big player decided to pour $10 billion into the silver market. Yes, you heard that right. The effects would be nothing short of explosive. Alastair MacLeod, a financial expert who's been spot on in his predictions, says that silver is gearing up for something unprecedented. In today's video, we'll explore why silver could be on the brink of hitting an all-time high, and trust me, you'll want to stick around to understand what could drive this massive shift. So, why is silver about to make history? Let's dive into the insights that could reshape the future of the silver market.
Monetary policy by the Fed actually drives the whole yield curve. It doesn't, because credit is like anything else. It's a market. I mean, if you have too much debt and not enough demand for it, what happens? Interest rates have to rise. The yields have to rise in order to clear it. And that's basically what we're going to be seeing. I mean, put it from the point of view of foreigners in particular. I mean, they can see the debt trap. And as I've said before, when you see the People's Bank of China buying gold, they're not buying gold, they're selling dollars. That's the way to look at it. And it's not just them, it's the whole of Asia doing exactly the same. And the word is out throughout Asia that the dollar is in trouble. I mean, it's not really driven so much by de-dollarization, because that's really relatively minimal. It's more a question of US government finances. There just is not the demand for the amount of debt being printed, if you like. And worse than that, because the US government is printing short-term debt, it's in effect financing the deficit by cash. That's the equivalent of it, when you're funding it almost exclusively through the T-bills. It's not good. It really is not. And so if you're going to get rising bond yields, what does that do to equities? It collapses them, because this is the second time round. We've had the first rise, which, we can sort of say.
Let's start by looking at the current state of the silver market. Recently, silver prices have taken some dips, driven by unexpected shifts in investors' sentiment and policy changes. Just after the latest U.S. election, we saw precious metals, including silver, tumble as market optimism surged on the promise of pro-business policies and higher interest rates. With silver dropping about 5% and gold around 3%, it's clear that investors are grappling with mixed signals. But this isn't just about short-term losses. Behind the scenes, silver's role as a safeguard for wealth in times of economic uncertainty has been gaining traction. The big question is, as the new administration's policies unfold, could we see a major reversal in silver's trajectory? Hang tight, because in the coming steps, we'll dive deeper into how this political landscape could actually be laying the groundwork for a silver price surge.
It's really, at the end of the day, if you're going to sell bonds, the value which they will have depends really on the willingness of buyers to buy them. And, foreigners are definitely not stepping up to the plate. Now, the reason that bond yields are where they are is an assumption that foreigners will step up to the plate. Now, admittedly, what's happened in recent years is that all the funding has been done basically on short term, because banks in particular don't want duration risk. I mean, we've all seen what happened to Silicon Valley Bank, for example. So, banks aren't interested in duration risk. So where's the funding? The funding is going into US Treasuries. Money funds, and banks are just buying, not US Treasuries, T-bills, the sort of 3 months, 6 months, maybe as far as a year. But any more than that, and there's, the only buyers out there are some pension funds and some insurance companies who have to have it for actuarial purposes. But that's pretty limited. It really is. And if you look at it from the point of view of US institutions, I mean, they can see this danger too. And so they're not really in the market going out along the yield curve. And that's why the Treasury isn't selling very much longer term debt. I mean, because there's no demand for it. And if anything, the foreigners are turning net sellers. I mean, particularly the two largest holders, who are the Chinese and the Japanese, or rather the Japanese are the largest, followed by the Chinese. I mean, okay, friends of America, like, the UK and I suppose the Cayman Islands.
Now, let's talk about what would happen if a major player made a $10 billion move into silver. Bill Holter, a respected financial analyst, recently warned that such a massive purchase could set off a chain reaction that would overwhelm the market. Think about it. A surge of this magnitude could clean out available silver within just days, creating a domino effect of forced liquidations and margin calls. Picture it, every investor scrambling to get their hands on silver, driving prices higher with each passing hour. Holter believes this could be triggered by anything from economic instability to geopolitical tensions, as more people look to silver as a safe haven asset. If this scenario unfolds, we're talking about a buying frenzy unlike anything we've seen before. So, could one big buy really spark a silver market explosion? There's more to this story, so stick around as we uncover how this perfect storm could impact the market.
In the interests of the ordinary person, because the number one priority is to protect deposit holders' deposits. The idea that you can do this with a bail-in, get the bank's own creditors, bondholders, and large depositors to bail out the small depositors, I mean, it's just nonsense. That's never going to work. But you're going to have bailouts. I mean, it's as simple as that. And we had this lesson from what they call the Great Financial Crisis. I mean, it's actually going to be the minor financial crisis compared with the one coming up. And that was when the Fed just literally wrote open checks, in effect. Anyone needs help, we will underwrite you. That's really what they did. I reckoned at the time they were sort of open-ended obligations to the tune of about $13 trillion, I seem to recall. That was, enormous. I mean, it's the first time we were really talking about trillions. Now, of course, it's old hat.
Silver isn't just another commodity. It's a safe haven for those looking to protect their wealth. When economic uncertainty looms large, silver shines as a refuge, attracting everyone from seasoned investors to everyday people concerned about the future. Right now, we're seeing economic instability on multiple fronts, rising inflation, currency fluctuations, and growing global debt. These are all factors that make silver an attractive hedge. With its dual role as both an industrial metal and a store of value, silver holds a unique position. Investors are increasingly turning to it not just to weather financial storms, but to shield against the creeping devaluation of paper currencies. As the world's financial landscape grows shakier, silver's value as a stable, tangible asset only becomes more compelling. So, with these pressures building, could silver's safe haven status push it toward unprecedented highs? Let's keep going to see how demand from emerging markets could fuel this rally even further.
Exactly. That's the whole point. I mean, the thing about banks are dealers in credit, and their balance sheets are leveraged, if you like, on equity. And it's wonderful if you've got, let us say, a 2% margin when you take into account all the costs and all the rest of it between what you lend out and what your depositors get. 2%, fine, gear it up 5 times, that's 10%, gear it up 10 times, that's 20%. I mean, they're trying to get something like 25% return on equity, or maybe even more through this leverage. You can see how they get to that point, if you like. As the economic conditions appear to improve, then they increase their leverage. The other thing that has happened this time round is that as the central banks have reduced interest rates to the zero bound, or indeed into negative rates, what it's done is it's compressed the bank's lending margins, the difference between, their asset returns on assets, which are loans up to whoever, and what they give their depositors, if anything. And that squeeze in the margins, their response has been to increase their leverage in order to protect the bottom line. There is a payback at that. When interest rates start rising, as indeed Silicon Valley Bank found out, the whole thing goes into reverse, and very quickly you go bust. And this is how this is going to be dealt with is going to be a very interesting question. I suspect that because a primary duty of the central bank is to protect the integrity of the commercial banking system, that the expense of this will be shown in the currency. In effect, the rescue will involve the Fed buying government debt so that it increases its balance sheet, it increases banks' reserves and all the rest of it. And not only that, but there will have to be rescues, which basically involve the printing of money. Inevitably. That's printing of money is the way people put it, but it's the other side of debt purchases by the central bank. It's the other side of QE. The other side of QE is cash chucked into the economy. They're going to have to do something similar to that, with a rather different angle. Instead of rescuing government finances and keeping interest rates suppressed, it'll all be about keeping interest rates suppressed and rescuing the banking system.
Emerging markets, particularly in countries like China and India, are ramping up their demand for silver, and this demand is no small factor. With their growing industrial needs and a rapidly expanding middle class, these nations are consuming more silver than ever before. In China, for example, silver is a crucial component in everything from electronics to solar panels, while in India, silver has deep cultural significance, especially during festivals and weddings, where silver jewelry and ornaments are prized. As these countries continue to grow economically, their demand for silver is expected to climb, putting even more pressure on a market with limited supply. And when we add rising demand from other emerging economies to the mix, the squeeze on silver supplies could be far greater than what we're seeing in developed markets. Could this growing appetite from emerging markets be one of the final pieces needed to send silver prices soaring? Stick around, because we're just getting at how global currency trends could further impact silver's potential.
It's just going to be, they're really going to suffer very, very badly. But the other level of it, of course, is that along with commercial real estate, along with residential property, equities form the collateral for the entire financial system. And when you get a collapse in these values, as we saw with Wall Street in 1930 to 32, you get a collapse in those values, it undermines the banking system. So these asset values are actually central to the entire financial system. And as they collapse in value, the threat to the entire financial system is going to be tremendous. And it's difficult to see how banks will be able to, if you like, weather this, particularly since they are operationally highly leveraged. I think I haven't looked at it recently, but last time I looked, the leverage in the US banking system was at the order of about 14 times. I'm looking at assets to core equity. Now, normally, that would be in the order of maybe 8 to 10 times. I have to say that the Japanese banking system and also the Eurozone banking system is in a far more leveraged, highly leveraged situation. There's certainly in the G-SIBs. A collapse in the stock market, I think, and the knock-on effects will threaten the entire financial system. So this is all part of,
Let's dive into how the strength of the US dollar plays into silver's potential. Generally, silver prices move inversely to the dollar. When the dollar is strong, silver tends to drop, and when it weakens, silver often rises. Recently, The dollar has gained strength due to rising bond yields and investor confidence in U.S. economic policies, creating short-term pressure on silver prices. However, many experts see this as a temporary hurdle for silver. As inflation concerns grow and debt levels continue to soar, confidence in the dollar might start to waver. When that happens, investors will likely seek out tangible assets like silver to protect their wealth. So while the dollar's strength may be holding silver back for now, a shift in sentiment could easily swing the pendulum in silver's favor. But there's another factor. Short positions in silver that could be the final push silver needs for a breakout. Let's unpack that next.
Well, we didn't really expect it, but on the other hand, it hasn't really sort of undermined the fundamentals, if you like, of corporate America. Well, it did actually, but you see what I mean? I mean, you can sort of take a bit of, you can tolerate a little bit of a rise in interest rates, but I repeat this virtually every interview I do. I mean, I remember the 1970s when we had gilt yields in a similar situation with less of a debt to GDP ratio. I mean, our debt to GDP ratio, it was something like 50-60%. We had a crisis, and it led to a requirement to fund on 15 and a quarter, and 15.5% coupons. This is, and the interest rates that went along with it were a similar level. In fact, I think they were slightly more. So you can see that, what we are really only in the beginning of a rise in interest rates and bond yields. Why? Because of the funding problem. And then I'll ask another question just to sort of ram the point home. The debt ceiling is due to be agreed on the 3rd of January. What's it going to be? I mean, if I was the incoming president, and by then that we will know who the incoming president is, I think I'd be angling for at least 40 trillion. What's that going to do? It's not going to exactly cheer up foreign creditors, that's for sure. So that's going to be a real bone of contention, I reckon.
Now, you mentioned
one of the biggest factors holding silver prices down is the massive amount of short positions in the market. Traders and speculators have been betting against silver, creating an environment where its true value might be suppressed. But here's the catch. If silver prices begin to rise, these short sellers could be forced to cover their positions, triggering what's known as a short squeeze. At short squeeze, the scramble to buy back silver at rising prices creates even more upward momentum, driving prices higher in a self-reinforcing cycle. We've seen this phenomenon before in other markets, and it can lead to dramatic price spikes in a matter of days. So, if market conditions turn in silver's favor, a short squeeze could be the very catalyst that launches silver into new price territory. But that's not all. Alastair McLeod points out that global shifts in currency practices could add even more fuel to this fire. Let's take a closer look at that next.
In particular, so she's up to her neck in Indian rupees, for example. Now, that's not a very happy situation for Russia. And I think that's why Russia was actually quite keen to push the idea of a gold-backed BRICS trade settlement currency back in August last year, ahead of the Johannesburg summit. But that is now a dead duck. That's not going to happen. If, as I say, if anything happens, it will be as a result of the collapse of currencies in the West. I mean, the other thing, so to respond to your listener's question, or viewer's question, I mean, really what they're trying to do is they're trying to assemble a parallel world, if you like, to the West, so that instead of the IMF and the World Bank, you've got the New Development Bank, which will do similar functions. They're planning, and this was announced at Kazan, they're planning, new precious metals exchanges, wheat exchanges. They're looking at other commodity exchanges and all the rest of it. So the idea basically is to build a complete parallel structure so that they don't rely on Western capital markets to sell and acquire commodities and all the rest of it.
Beyond the market mechanics, there's a larger shift happening on the global stage that could dramatically impact silver. Nations around the world, particularly in Asia, are gradually reducing their reliance on the US dollar, and instead, some are looking to gold and increasingly silver as alternatives. Alastair MacLeod highlights this trend, where countries are diversifying away from the dollar, and it's already leading to a rethinking of reserves and investment strategies. This shift away from the dollar signals a broader loss of confidence in fiat currencies. And as these countries build up reserves in tangible assets, silver could see an influx of demand from central banks and international investors alike. Imagine the impact if major economies began treating silver as a reserve asset. This could supercharge demand and push silver prices into a new era. So what does this all mean for silver's future? In our final step, we'll reveal why MacLeod believes silver is set to break records and what factors are aligning to make it happen.
Since sort of mid-September. But I'm convinced that this rise is something that is going to continue. And the reason for that is because there is a debt trap which the US government faces. And I don't care which presidential candidate wins this election. They're both promised, if you like, to spend and increase the deficit, presumably before it will fall because the economy will recover or whatever dreams they may have about the future. But a rising deficit at this stage is going to be very, very difficult to fund, and it's going to mean rising bond yields. It's actually as simple as that. So this is the second iteration of rising bond yields. We've had the first, and the equity markets managed, if you like, to continue with their momentum through the first. Through the second, history repeats itself, or rhymes, however you like to put it. The second iteration of bond yields rising, that will upset equities. And I believe that the fall in equities actually could be very, very serious. Now, the reason I say that is that if you look at the valuation gap between bond yields and equities, they are actually standing at an all-time record, far higher, almost twice as high as they were during the dot-com bubble, which really means that the equity market is so far adrift from where it should be. It means that, if you like, there's a very high risk of a very, very sudden and nasty collapse. So this is something you've got to be aware of. And I think, if you like, putting it very, very simply, is part of my argument for getting out of credit. I mean, you think that equities give you protection against a little bit of inflation or whatever. I mean, well, sometimes yes, but sometimes it's extremely dangerous. I mean, I do remember in the inflationary times in the 1970s, stock markets performed extremely badly. So the idea that you get protection by being in equities in those times, and those times are back again, I would argue, it's completely fallacious.
All these factors, rising demand from emerging markets, the potential for a short squeeze, and a global shift away from the dollar, are building up to something monumental for silver. Alastair MacLeod believes we're standing on the edge of a historic moment, where silver could hit new all-time highs. With the current economic and geopolitical climate, silver's appeal as a safe haven asset is stronger than ever, and these pressures could converge to drive prices up in ways we haven't seen before. If central banks continue to diversify their reserves and more investors turn to silver as a hedge against inflation and economic instability, it could push the silver market into an unprecedented rally. This combination of factors makes MacLeod's prediction not just possible but increasingly probable. So, if you've been considering silver as part of your financial strategy, now might be the time to take a closer look. Don't forget to subscribe for more insights on precious metals. And remember, this is informational content, not financial advice. Stay informed and stay ahead.
Values fall. It's really quite simple. Return, if you like, on your investment by one means or another. But equities, when you have a bull market in equities, inevitably it gets to a point where the bull market, if you like, is getting tired. The participants tend to be the wrong sort of participants. They are the general public who have just got back in onto equities because they have been rising. They don't understand why. They will buy something that has already risen, basically. And at that stage of the credit cycle, bond yields are already rising. Now, what I have observed over the decades is that the first rise in bond yields tends not to upset the equity markets, because the equity markets at that stage are being driven by momentum rather than value. However, when you get a pause, of course, then that momentum in equities continues, and it can very often translate into a bubble. But when bond yields start rising for the second time, that's the point where the equity markets really begin to fall. And we've had a rise in bond yields. I know it's only 60 basis points on the US Treasuries, 10-year Treasuries, long bond.
Now, here's where things get really interesting. Imagine this. A single, massive $10 billion purchase of silver could collapse the entire market, according to financial expert Bill Holder. Why? Because such a buy would trigger an overwhelming influx of demand, squeezing the limited silver supply and setting off a chain reaction of forced liquidations and margin calls. Holder predicts that, in this scenario, all available silver could be cleaned out in just a few days, a scenario with the potential to send prices soaring. And it's not just one-off purchases we're talking about. Emerging markets like China and India are ramping up their silver demand, driven by both industrial needs and the desire for financial security. With global tensions and distrust in fiat currencies rising, silver's appeal as a tangible, valuable asset is only strengthening. But what happens when rising demand meets an already tight market supply? Could we see a tipping point where silver's price begins to soar uncontrollably? Stay tuned as we dive into the mounting pressures that are priming silver for what could be a historic rally.
Of commodities and all the rest of it. I mean, for example, the building of a railway from Mombasa on the East African coast all the way through to the Congo is all about shipping out, sort of things like cobalt and copper and, all these wonderful things that are being discovered in the Congo. And in return, of course, the Chinese, are importing capital in. So the currency thing doesn't really matter in a sense. What they're doing is they're importing capital into places like Kenya, Uganda, Belgium, the old Belgian Congo, the Congo, Central African Republic, and so on. The idea basically being that by improving communications, by opening up the country properly, investing in it, then everybody's going to benefit, including China. The only country with a problem in this, I guess, really, is Russia, because Russia is a huge net exporter of energy in particular and other commodities, and does not have imports that match. So she is always having to import other currencies, which is the result, if you like, of her sales of energy.
Here's a potential ticking time bomb: the huge short positions in the silver market. For years, many institutional investors have held these positions, betting that silver prices would remain low. But in a rapidly shifting market, those short positions could turn into a major liability, and fast. If silver prices start to rise significantly, these short sellers will be forced to buy back silver to cover their losses, creating what's known as a short squeeze. Imagine a scenario where these investors, scrambling to cover their positions, actually drive the price up even more, The result? A self-fueling price surge that could send silver rocketing to levels we haven't seen in decades. As demand for silver rises in response to geopolitical tensions and currency uncertainty, this short squeeze could amplify market volatility and accelerate silver's rally. But how close are we to triggering this squeeze, and what impact could it have on the silver market? The answer could redefine the market as we know it.
I mean, the new BRICS currency is not going to happen. Forget it. I mean, it really is. I think we just dismiss all talk about it. If anything happens, it will be as a result of the collapse of our currencies, the credit, because our currencies are credit. As someone said before a congressional committee a long time ago, the dollar depends on the faith, if you like, that people have in it, the faith and the credit in the U.S. government. So, when that collapses, then there may be a change. And I guess that the change will not be a new BRICS currency, but what it will be, I think, is for defensive reasons, China and Russia putting their currencies onto a gold standard. Now, whether they do it properly or not, we'll have to see at the time. I mean, it's very, very simple to do. So I think that's the important thing. Now, in terms of any comparison between the European Union and BRICS, the big difference is that the European Union is a political union, whereas BRICS is in effect a trade union. It's a union based on if you like, free trade between the members. That's the whole point of it. And principally, it's not just free trade, but also the recycling of investment to improve the infrastructure in these countries, to allow for the extradition.
Throughout history, whenever geopolitical tensions rise, precious metals like silver become the refuge of choice for investors worldwide. Think about it as uncertainties deepen, especially in times of conflict or strained international relations. People look to assets that hold intrinsic value, untouched by the instability of paper currency or shifting political powers. The ongoing tensions, from the Russia-Ukraine conflict to new economic rivalries, are just the latest examples where silver's appeal as a safe haven intensifies. In fact, in recent years, silver has rallied in response to crises, acting as a secure asset when traditional investments falter. The reason is simple. When global uncertainties spike, so does demand for tangible assets like silver that hold value independently of governments or banks. But will this trend continue as tensions escalate? And could this increased demand be enough to tip the balance and ignite a massive rally in silver's price? We're about to uncover how these geopolitical dynamics are stacking the odds in silver's favor.
I would say there's only upside. This is a short answer. I mean, when you've got a failing, when you've got someone in a debt crisis and the whole thing's failing, and it's likely to trigger complete financial chaos, why have anything in it? Just get the hell out. And the only way you get the hell out is to get out of credit and get into real money, which of course is gold. And that is the message that central banks around the world now understand. They may not admit it, but basically that's why most of the central banks, and okay, not the major ones aren't admitting to anything. They're just keeping very, very quiet. But all the Asian central banks and government funds and all these sort of hidden bits, they understand completely what's happening to the credibility of the dollar and all the other Western currencies. And so they're getting out. That's really led to demand for gold. And it's just cleaned us out of any gold liquidity, or it is cleaning us out of any gold liquidity.
The U.S. dollar has reigned as the world's reserve currency for decades, but now a seismic shift is underway, and it's reshaping how nations think about wealth and currency. More countries are reducing their reliance on the dollar, turning instead to other currencies, or significantly to precious metals like silver and gold. This movement, known as the dollarization, is no longer just a trend. It's a reality, with nations like China, Russia, and even allies in the Gulf exploring ways to reduce their dollar exposure. This shift is more than symbolic. By diversifying their reserves, these countries are setting the stage for increased demand for assets with universal value, silver being a prime example. As the dollar's dominance slowly recedes, silver's appeal grows not only as a safe haven but as a tool of economic independence. This growing demand from national economies could drive silver prices to heights rarely seen. So, could the dollarization really become the driving force that fuels a historic silver rally? The answer could forever change the landscape of global wealth.
The BIS has lost the plot. I mean, they really have. It's really quite extraordinary that, what they've been sort of banging on with CBDCs and, digitization or, digital money or whatever. I mean, money's already digital. I'm not quite sure what the hell they're talking about. This business, I mean, I think that what they did with this Enbridge thing was they were probably told by, let's say, the Fed and, the Western Alliance, under no circumstances are you going to help the Russians and the Chinese compete against us. So, you then get the backing off. But a lot of that is completely unnecessary. I mean, apart from anything else, the whole idea of a new currency has been dropped completely for the very simple reason that if you're going to drive the dollar out of circulation for trade settlement purposes, you've got to come up with a better currency. And that better currency can only be something which is credibly convertible into gold.
Silver isn't just a safe haven asset. It's also essential in industries powering the future. From electronics to solar energy, silver plays a critical role, making it indispensable to modern technology. This industrial demand gives silver a unique edge because it's not solely reliant on investor interest. It's an irreplaceable component in countless products we use daily. Now consider the silver futures market, where contracts are bought and sold to lock in prices for future deliveries. These futures help industries secure silver, but they also open up opportunities for speculation. With silver supplies already tight and industrial demand showing no signs of slowing down, futures could push prices higher, especially if more industries hedge against silver's potential price increase. So, what happens when this rising industrial need converges with limited physical supply? Could we see a surge in prices as industries and investors compete for silver? This intersection of industrial reliance and speculative futures trading might just be a powder keg waiting to ignite a silver rally.
There's a problem with the approach there. The idea of gold's true value. Gold's true value in fiat currency is what you see in the market now. And the other thing I would say is that, if you're expecting the gold price to rise, actually what you're looking at is a fall in the value of your fiat currency. That's actually what it's all about. It's not about gold rising. I mean, you've just got to look at the value of gold over the millennia, and you can see that the purchasing power of gold actually varies remarkably little over big, spans of time. I mean, if you look at individual things, they come and go. The value can increase substantially or decrease substantially. But if you look at oil, for example, since 1950, it was priced in 1950 at $2.53 a barrel. In terms of gold, the price today is actually slightly lower in gold. In other words, the value of gold is slightly higher measured in oil from 1950. But at the same time, if you look at it in dollars, it's now $70 a barrel from $2.53, and it has been $140. And it has been very briefly negative, if you remember, when there was a delivery problem in April 2020. The volatility is not in gold. It's actually in the fiat currencies. That's what's happened. It's the purchasing power of fiat currencies which is going down. And I would say they are now falling at an accelerating rate. And that's the important thing. So when you look at the gold price and you see it rising, it's not gold rising so much. I mean, obviously there's an element of it, rising for whatever. But in the main, it is really your currency going down the Swanee.
As inflation rises and currency values face increasing pressure, silver emerges as a powerful hedge for protecting wealth. Across the world, inflation rates have been climbing, eroding the value of traditional currencies and making everyday goods more expensive. For many, this environment of high inflation and currency devaluation makes tangible assets like silver more appealing than ever. When a currency weakens or does its purchasing power, leading investors to seek assets that can withstand this decline, and silver has historically been one of those assets. With silver's value grounded in its limited supply and essential uses, it remains resilient even as currencies fluctuate. This resilience is why, in times of financial instability, silver is often sought after as a store of value, helping to shield wealth from inflation's corrosive effects. Could silver's role as a hedge against inflation make it the ultimate asset in today's uncertain financial landscape? As we continue, let's explore why this shift toward tangible assets could drive silver prices to unprecedented levels.
I'm not quite sure why she's saying that. I mean, is she saying it because it's a Trojan horse to try and get the dollar back onto a gold standard? Because that's the only way in which that proposal makes sense. I mean, if you're going to have a 50-year gold bond, then if the liabilities of covering that from a fiat currency are just inconceivable. I mean, they really are just horrendous. So I suppose, I haven't really thought about what she said, but the only conclusion that I can think of being put on the spot is that she must be thinking of some sort of way of getting back onto a gold standard, because that's ultimately what would have to happen if America issued a gold bond. But of course, that raises other questions. What is America's actual true gold reserve position? And it also raises the question, the New York Fed is custodian, what they call earmarked funds, earmarked gold, holding earmarked gold for foreign central banks. And we saw when Germany tried to get some of hers back that Houston, there was a problem. Is that really there? Is all that gold really there, etc.? I mean, this is a can of worms as far as America is concerned. And I don't know. I mean, I would be tempted if I was Judy Shelton also to sort of maybe, if you like, sort of have a slightly impish approach in terms of humor to the whole thing. Because, I mean, the problem America has is that having gone off the gold standard, having denied gold is anything to do with the monetary system, and that the new gold is the dollar, full stop, and the whole world is now on a dollar standard. To come back from that in an organized fashion is virtually impossible. And not only that, but you would have to sort out America's finances, because it's completely unsustainable going back on a gold standard with the way things are.
All the pieces are coming together, forming what could be the perfect storm for a silver rally of historic proportions. From surging global demand and market vulnerabilities to geopolitical upheaval and de-dollarization, silver is positioned like never before. Each factor we've discussed, the pressure on short positions, the increase in industrial demand, the impact of inflation and movement away from the U.S. dollar, is setting the stage for what could be an explosive price surge. If silver breaks through the barriers holding it back, we could witness a rally that changes the game entirely, redefining how investors approach both wealth protection and growth. This isn't just about a potential spike in price. It's about silver's growing role as a global economic anchor amid financial instability and shifting power dynamics. So, as these forces converge, could this be the investment opportunity of a lifetime? Remember, While silver holds massive potential, always approach investments with caution and consult professionals as needed. And if you want more insights like this, don't forget to subscribe. This could be one of the most critical moments for precious metals in modern history, and you don't want to miss out.